the permitting process is well known. Basically permitted not only the underground at Kanmantoo, but also the last open pit expansion that was done at that same operation. So I've been through that permitting process twice now with the South Australian government, well understood and understand what needs to be done. We've been scoping all of the work we need to do with government since about last October, meeting with them every couple of weeks. They've been involved in the design of what those studies need to look like so that they ultimately, as the customer, get what they need. So that permitting process is going well. We will lodge that mine lease application towards the end of July. There'll be around 6 months sort of process for government to review that. We'll be sitting down and page turning that document. That was a big learning I took out of the first two permitting processes. What you don't want to do is just give this to government and then wait 6 months and see what feedback you get, because by the time you look at that, review it, and you send the revision back, the people that you dealt with in government, they've gone.
This is general advice and my opinions only. This episode's company has paid me for this interview. I may be long, short, or hold an interest in stocks or CFDs mentioned. Past performance isn't reliable. The interviewee's views are their own, not necessarily mine. LEVRD operates as a corporate authorised representative, 00131 8377 under AFSL 548573. You can find our financial services guide via the LEVRD website, link in the show notes.
We are heading to what I reckon the best mining jurisdiction in Australia, South Australia. Oh, they love mining. Lachie Wallace, mate, you love South Australia, it appears. Ex-Hillgrove, now Investigator Silver, IVR, mate. Welcome to LEVRD.
Great to be here, Matty.
Mate, I've just read through your DFS. I see that you are going to need water. Water is a big ticket item. Any chance of getting Jero James flying to South Australia? You just let me know, mate, if you need your bore field set up, and then I'll tell him. It has to come through me.
Sounds like there's a deal to be done there, Matty.
Mate, there's always a deal. Mate, announcement today. You've, I'll just go through the metrics first for the punters. Rise, one of, I guess, Aussie's pure play silver mines, and we're going to go through why that is. So you can see it's pulled back with the silver coming back down to about $57 an ounce, 117 mil market cap. You did a big chunky raise last year. We'll get into it, but you're getting the old Hillgrove team back, mate. I see you've appointed some people today to start delivering this project. Big Joe is coming in to obviously sort out the silver financing. Why now, mate? Plenty coming up, but why get the team in now?
Yeah, look, it might be a little bit misleading. We've been building this capability over the last few months. Today's announcement was really triggered because Joe's taking on that statutory appointment as the COSEC. But I wanted to use that as an opportunity to update the market on some of the broader capability that we've been assembling. So obviously the project is pure silver, genuine scale, but now we're starting to move, I guess, into execution, and that means we need a different skill set through the permitting, the detailed engineering, financing, operational readiness, as well as, that exploration expertise that we already have. And fundamentally, it just required a different organisation. So we've been basically bringing together that expertise across the mining, the MET, the permitting, project delivery, finance, stakeholder engagement. And these are the people that we've brought on. And effectively, these are all guys that have financed, they've permitted, they've built projects before, they've been involved in Kanmantoo, Carrapateena, Pecines, Gula, Cratton operations. So all people have got recent South Australian mine building experience. They understand the regulatory environment, the contractors, infrastructure, and really the practical realities of delivering projects in the state. So a lot of companies will talk about becoming producers, but far fewer have a team that's actually gone and done it. And really, to get a Guernsey investigator, that is the minimum requirement. So we're really happy to put out, or to just update that we've started to assemble a credible team that we can take this project through that permitting, financing, construction, and ultimately into production in the near term.
Yeah, good stuff, mate. Before I got the project up here, the Paris project. I've even put the dad jokes in the questions, the comparison to other projects. But mate, before we get into that, you're in South Australia again, and this is the fourth project you built. This is the second in South Australia that anticipating this will be built. Kanmantoo was. You look at it, it was built in a bit of a lower price copper environment. It wasn't super high grade. I'm sure it was always a tough balance to. It seemed like it was always on the line. How are you looking at this project, even when silver's at 57, 60 bucks an ounce US, how's this stacking up, building this as a greenfield one versus a brownfield restart that you did at Kanmantoo?
Yeah, I mean, we're really proud of what we did at Kanmantoo. We actually took that from an underground to a final investment decision for first copper con in around 8 months, and shortly afterwards got into that positive operating cash flow, on time, on budget. Yeah, and so something that we were very happy to do, and really pleased to see that's growing through the exploration success. Yeah, at depth, very much in line with that strategy. But I guess what we see here at Paris is fundamentally different. It's a step change in capital. You know, it's not a brownfield start, $40 million. We're talking $260 million greenfield build. But the reality is, there's no real change in execution complexity. Kanmantoo, benefited from existing infrastructure, but technically it was far more challenging project. We're developing underground mine, complex sequencing, tighter grade control, lower grade, as you sort of pointed out. Paris is almost the opposite. Obviously, we've got to build the infrastructure from scratch, but technically, really simple mine. We've got an ore body, it's flat, it's tabular. It starts only 10 metres below the surface, up to 400 metres wide, almost 2 kilometres long. It's almost purpose-built for a straightforward bulk open pit operation. Process plant, equally as conventional. It's whole of ore, cyanide leach, Merrill-Crowe, standard off-the-shelf equipment, no novel equipment coming in, no new processing, no weird chemistry. It's basically off-shelf equipment just delivering a silver doré. Often I look at this and think about it and go, if you have to spice, this project really isn't it. And when you're building a mine, these boring, so large-scale open pits, standard processing equipment, that's exactly what you're looking for. You want simple projects that are easy to finance, easy to build, and really easy to operate. So, whilst Paris might be a larger sort of capital project coming from scratch, actually, you would argue it's probably lower risk from a technical point of view than Kanmantoo.
Yeah, that was the first thing I sort of noticed, like, is compared to, brownfield restart, like, open pit is just going to be there's so much less that could. It feels like there's a lot less that could go wrong here, and sensitivity wise. But commodity price is going to be your big driver. How are you? And I keep coming back to your journey with Kanmantoo. Great job getting that done so quickly in 8 months. How do you feel the gauge on the commodity price for this project? Like, it's, we've had the rip up. I'm sure you would have taken $60 an ounce silver 3 years ago any day of the week. But that's where it's sitting
12 months ago, mate. 12 months ago, $60 was only a dream.
Yeah. So you got a bit more confidence in the commodity price for this one than you did when you were doing copper?
Oh, certainly. I think you need to design, with a range of commodity prices involved. So with regards to the Paris project here, we've actually done all the optimization based at $48 US silver price. So everything's been optimized to that. And in addition to that, we've also stressed to be able to right-size the project. We've stressed that in terms of all of the aspects that the lenders will look at. So we've downgraded the actual head grade. We've taken a cut to that overarching commodity price below the $48, so reduced that even below $40 for our economic assessments. We've increased the cost, increased the grade, increased the cost and from a capital and operating point of view, and we have. And we've also started to slow the ramp up down. And the reason we did that when we're trying to design, I guess, the basis of design for the project is to really take that lender-looking approach through the project build, because the reality is it's not NPV that the bankers are going to fund. They're going to be looking at project resilience. The reality is they're looking to get their money back with relatively low risk. And so we want to design a project that could withstand those type of finance-led scrutiny that will be put under when we go and take this to the banks.
Yeah, I'll go over the metrics of the project, mate. And there's a couple of differences you've got between your silver peers. So you're it's 30 million ounces over 108 months. So what's that about? It's a bit over 3 and a bit million ounces a year. Looking to pump out. And I guess the decision, because you've got lead as well. Like, it's a silver lead resource, but you're compared to other ones, you're going down the road, and instead of producing a concentrate, you are going through the Merrill-Crowe process to produce silver doré on site. Can you give us an insight about why go this way versus the other, or is there a specific reason, and why do others go the other way?
Yeah, it really came down to, I guess, metallurgy and economics. I mean, we evaluated both processing pathways. Paris does contain lead, as you said. We look pretty carefully at producing a lead silver concentrate. The challenge is that the flotation characteristics of the lead minerals that we have are quite similar to the host rock. And so to recover more lead, we also recover quite a lot of the impurities, which just really results in a low-grade concentrate that is particularly attractive from a commercial point of view. So when we compared that with the conventional whole of ore cyanide leach Merrill-Crowe recovery process, the answer became really quite clear. The cyanide leach route delivers strong overall project economics, allows us to produce that silver doré directly on site in a similar way that you have conventional gold operations producing a gold doré. And there are quite a few advantages to that. Firstly, we're recovering more value from the ore. We also eliminate some of the complexity about producing and marketing concentrate. We'd have to negotiate with smelters, worry about concentrate specifications, the pay treatment charges, or accept any penalties for impurities. We're basically just producing a finished product that's sold directly to the bullion market.
You don't have to truck it anywhere.
I mean, you're not dealing with any of that sort of complex logistics.
Where does silver doré go? Like, does it just go to a mint? The normal.
Yeah, it does. Mint, ABC Bullion over in Sydney, they'll be the ultimate customers unless we end up with some sort of offtake agreement as part of the funding mix, which we're not, we're having a look at. Not averse to doing that, and that might form part of that broader funding mix. In which case, we'd go directly to an offtaker who may be an end user, using it in all the things that they may need. Particularly around the the green energy revolution that's coming on as we decarbonise, more silver's being used, and people are really trying to get their hands on the physical, and it might be that's where it ends up.
Yeah, interesting. And I assume like they call it a gold room, but this is going to be a silver room. If you're producing 3 million ounces a year compared to a gold mine that might produce 100 or 200,000 ounces, I assume the bloody silver room must be huge. Is it the exact same process as pouring gold bars as pouring silver bars?
Pretty much identical. Obviously, a bigger room to house it every week. There's a 5-ton truck leaving at the front end because we start off more around the 5 million tonne per annum mark, because we're obviously making sure that we jump into that pit, high grade in the areas, bringing that cash flow forward, and that's what leads us to a project that has a payback period in the order of around 12 months. And as the project goes on, that grade sort of drops away, and then we get to a lower grade sort of rehandle at the back end. But the front end of the project is 4.5 up to 5.5 million tonnes per annum of silver rate. And that's a 5-ton truck leaving on a weekly basis out the door at the front end of the project. So it'd be really good to get that regular cash flow coming in.
Nice. Mate, take us through where we're at the moment. Like, I guess the big bottleneck is probably, would it be permitting and getting it all, that whole journey, or is it all running in parallel with all your upgraded drilling, feed, design and everything? Where's everything at the moment?
Yeah, so we basically had 3 main work streams. Obviously, the permitting is one of those, and that'll be the one that guides the timeline to FID. So the permitting process is well known. I basically permitted not only the underground at Kanmantoo, but also the last open pit expansion that was done at that same operation. So I've been through that permitting process twice now with the South Australian government, well understood and understand what needs to be done. We've been scoping all of the work that we need to do with government since about last October, meeting with them every couple of weeks. They've been involved in the design of what those studies need to look like so that they ultimately, as the customer, get what they need. So that permitting process is going well. We will lodge that mine lease application towards the end of July. There'll be around 6 months sort of process for government to review that. We'll be sitting down and page turning that document. That was a big learning I took out of the first 2 permitting processes. What you don't want to do is just give this to government and then wait 6 months and see what feedback you get, because by the time you look at that, review it, and you send the revision back, the bloke that you dealt with in government, they've gone, and you start that process again. So what we do is we sit down, we page turn that with government, we agree to things along the way. And by way of example, at Kanmantoo, when I did that, the process took about 4 months. We sat down, we would have changed a whole heap of things within the actual permit, the mine lease application, or the PEPA, as in the environmental permit that goes along with that. But the reality is we only had one discussion through that entire sort of 4-month period that they wanted to see something that was going to impact project economics. We got a whiteboard out, sketched out some different options for the course of about an hour, and then after that we resolved to do a little bit more work, come back with a resolution. But we ultimately were able to resolve that, work through it, and go forward. I mean, the government in South Australia is really good when it comes to mining. About $1 in $15 state economy is coming from the mining industry, and they genuinely go after it and are pragmatic about making mining operations come to fruition. It's just a really good place to work, and you saw that reflected even last year. The Fraser Institute recognised, South Australia not only is the best place to do business in Australia, but fourth best jurisdiction worldwide in terms of mining investment attractiveness. So it's just a really good place to do business.
Yeah, I think I was at Resource Rising Stars. I think it was a couple of years ago. The gather round one they did at Adelaide, and the mining minister actually rocked up and did a speech, and it was like, he's like, mate, we are open for business. Come talk to us. We're on your side. And it was the most just seeing government rock up at a punters convention, but of just that's really I've really held on to that, and it was just something I'd never seen before. So yeah, when you say that, I believe you.
The access to this has been really good. We had lunch with them last week, and they're very engaged. They want to understand what's happening, what's impediment, if there are any, to business. Because they look at commodity prices, they look at the value that places like BHP that obviously took over the Oz Minerals assets here in South Australia are pumping into that state economy, and they want more mines to come online because it's such a great economic driver, and that's put us at Paris in a box seat because the last mine that was permitted was the Kanmantoo one, and shortly after permitting we got into operation, and now it's got a couple hundred workers up there, delivering value into that South Australian economy, and that's exactly what they want to see happen with Investigator at the Paris project.
Is it easier this time around, like the fact that you're walking in for the second time and I assume that there was a lot of learnings in the last process. Like, is this feel much less stressful doing it a second time around, getting one permitted?
Yeah, absolutely. I think going through the process, you learn a lot on the way through. So now we know, where the tight point's going to be. We deliberately hit those up front. So things like hydrogeology, tailings dams, they're really critical things that the government wants to pay good attention to and get that right, because it becomes a long-term critical risk. So we started scoping those in about October. They've taken some time, but they've basically now concluded and we're ready. So effectively, by the time government gets our mine lease application, they will have reviewed all of the key things that they want to have a look at, and it makes that process then very quick and smooth to work through when we do it. And it just means there's less rework from both company but also government, because keep in mind these guys are putting in a heap of resources, time, money, and they don't want to have to repeat and do rework either.
Yeah. What about the native title and heritage side with the permitting? Is that running in parallel? I see you've been engaged with sort of the Gawler Creighton local group for about 13 years. Is it similar over here? That's the mining lease being granted is contingent on the heritage and native title being agreed to as well?
Yeah, exactly the same. So we, as you said, we've had 13 years with the Gawler Rangers Aboriginal Corporation. That partnership has been good. What we've identified over those 13 years was areas of cultural significance, and we just made sure that when we designed the layout, not only for the site but all of the infrastructure, bore fields, road access, etc., that we were sympathetic to where those areas were. But we've just spent the last 12 weeks doing week on, week off, so 6 weeks of walking is about 3,500 hours, cumulative walk hours, basically to clear every single area. So we've gone through all of the project layout, infrastructure corridors, bore field, camp area, etc. All that's been basically walked on about a 20-30 metre line, and basically gone through and cleared all those areas. So we are now ready for the agreement making to start, and that kicks off early July. So really looking forward to resolving that, getting agreement that everyone benefits from.
Yeah, awesome. And you're looking at they're going to probably finish together. They're obviously a bottleneck, like as important as each other, the mining lease side of things and the native title heritage. You're anticipating sort of like end of the year as a possibility to get all that granted?
That's definitely the aim that we're working towards. And then on basis of that, the way it works in South Australia is you're granted a mining lease with a series of conditions, and then there's another permit which is called a PEPR over here. Is basically an environmental permit, but the basis of that is to address the conditions that are put forward in the mine lease agreement. That usually takes about 3 months to do and work through that with government. But I guess what's been critical to us is that it's not like we've just developed a mine plan and then said this is what we're doing. We've been engaging with the Gawler Rangers Aboriginal Corporation on the way through, so they're comfortable with the process. It includes the things that are important to them. Groundwater is really quite important to the group. We've made sure that we've acknowledged all of that within our permitting. So that's brought everyone along for the ride. And what that means is you build those relationships in the field. You build them with creating respect within the actual agreements that we're putting together. And we suspect that, we hope that then leads to better outcomes for all parties involved just by being involved in that design process. I mean, these guys have actually quite a good level of mining experience. A lot of them are working at the iron mines around Whyalla. And they actually came out in the first survey. I was out with them, and they sort of said, why you put the pipeline here, blokes? Are going to be actually better down here, and they were right. And we moved the pipeline in the field, changed the design, and they had direct input to how this mine is being constructed.
Yeah, no, appreciate all that, mate. I know we spent a bit of time on that, but it is unfortunately the most important thing to your success and making money is that whole process. So, appreciate all that, mate. The next I want to get onto, I guess, the balance sheet and where, the funding, the FID for this, and because as you mentioned here, the ounce profile looks, exactly what you want. You've got the most ounces coming out right as you're fully commissioned in year 3, as you can see here, sort of 4.7 million ounces per annum. The FID side, so because you did your 55 mil raise, very conveniently at the end of last year when silver started ripping. You said you got 260 mil CapEx costs for this project, so circa 200 odd million funding gap. What's the plan at the moment? What are the big ticket items that you've got to get done to get towards FID? And whether that's the financing, any further drilling for any confidence. I see you've got a high indicated level on the resource already, but is there further drilling to get more into the reserve to secure funding? Take us through the big year you've got to go through all that.
That's a big question. So I'll sort of break it down into parts a little bit. In terms of where we currently sit with our funding position, as you said, we actually raised on the weekend that the first bombs were dropped in Iran. So we took a little bit more money because we're a bit uncertain about how that all might flesh out. We've got about $60 million in cash. We've also got about $19 million of in-the-money options, which expire in March 2028. So, as it stands, we'd expect for that money to come in, a little bit dribble in every now and then, but we'd suspect that most of that will come in, sort of towards 2028, which will be part of the construction period. So, really strong position, but I guess we also obviously need to, so that gets us through to FID in terms of doing the detailed engineering and some of the drilling work. So I'll speak to those just in a moment. In terms of funding mix, the way we'd be looking at that $260 million build is that we would get to FID with roughly $35 million cash remaining plus the 20 coming in. We would seek to provide traditional project funding to the tune of about $200 million. And then, it would really depend, me speaking to things like, vendor-related finance, where there's equity-related components associated with deferred payments, and then effectively something like that, an offtake-related agreement, potentially gets us over the line without coming back to market. That would obviously be where we're aiming to get to. But, we're going to keep that funding mix open until we start to see what those different opportunities look like. What we have had is a serious amount of inbound opportunities. But before we do that, I do want to go through some of some more optimization of the DFS. There's some opportunities around what we did with power. There's some opportunities around camp. There's opportunities around cost of road building that we deliberately were conservative about within the DFS because I'm sort of entering this position now where the SOM curve enters that sort of valley of despair. So it's always good to have some nice positive news flow to improve along the way as we sort of work through this process. But as we start to nail down those, we will start soft sounding financing groups towards the end of this year, see who might be interested to provide that traditional debt, and then create or start a formal process early next year after people sort of come back from that Christmas break with a view to finish it off by about the middle of the year in time for FID. So that's occurring. Parallel to that, we've got engineering underway. So we obviously had that done to a certain level at the DFS. Let's call it plus or minus 30% or thereabouts. We now are working through, I guess, that feed process, getting all the way through to issue for construction work plans, and making sure that by the time the permitting is done, that funding is lined up, subject to FID, which will be primarily the permitting being completed, and that the engineering is ready to go, so that we can walk in the door and start developing the operation. And I guess taking additional money. We went out with a $40 million raise. I think we had about 105 mil bid. We ended up taking about 51. What that's done is it's enabled us to consider looking at things like some long lead items. So we'll consider things like early camp construction, early power, water, road access, so that we can get cracking straight away. But also enables us to start thinking about some of those longer lead opportunities. So we're talking about things like ball mill, switchgear, MCC, those longer lead items, which for a small down payment, you can get in the queue and really accelerate that timeline to first silver.
The inside, because you've done this before, it just the joys of being in your job, like when you know the path you've got to take, and you you've built mines before. You're going to build this one. But it's also share price driven during a period when you're having to, the market focuses on your share price and the Lassonde curve and everything, and you're just like, we're just trying to deliver this project and start producing bloody metal. And it's half your attention has to go to try and managing the expectations of investors and trying to keep it high enough so you can get good value for equity raises. Like, mate, is it just insight into having that job? Like, speak freely. It must get frustrating going through the journey. Like, trying to balance the noise.
Yeah, I guess we've got to a position now where we're well funded to be able to go through it. I mean, I can't control the macro. It is what it is. And the price obviously dictates how all us junior commodity ASX listed companies are trading. A couple of mines I've built have been with private groups. That's been quite a different experience. I mean, they're really worried about getting the job done, getting that trade flow, and making sure you're generating profit along the way. But they're obviously a smaller group of people, potentially more sophisticated, but they're in there for the long haul, less liquidity to be able to exit. Whereas obviously when you're dealing with a publicly traded business, people can basically make their frustrations, if it is in share price, known on a daily basis by exiting, or the opposite by entering the stock. So I think for us, and what I tell the team is, look, there's certain things we can control. The commodity price is not one of those. What we need to do is to continue to de-risk the project, and the best way to do that is we advance the engineering, we get the permitting nailed down, and we get the financing ready such that it's in place. Now, I guess because we have done or developed this project with a much lower or to be robust under a much lower price than where it's currently sitting at the moment, I'm pretty comfortable that all that financing will be there. And if we don't have to tap the equity market, at least not to a significant amount, then the share price is what it is. And I think as we sit here today, we basically have 60 million in cash, market cap about 110 or thereabouts $1 million. So we're basically sitting there with an EV, $50 million. And to me, what I've said is, look, if we just de-risk and demonstrate that this mine is going to be built, the risk is low, then that valuation will look after itself. And that's all that we can do.
Yeah, 50 mil EV, that's what some of these gold shell companies were at the end of last year, mate. So, you got Jupiter on the register. They backed the raise. They're probably your biggest insto holder. I guess take us into their support. Any other big instos on the register, or is that what you're going to be sort of chasing, heading towards that FID?
Yeah, so I mean, Jupiter have been a great long-term supporter. They've been on the register for over a decade now. They've been supportive and held their position all the way through. They hold about 14% of the stock.
Wow.
As we've been raising over the past period, so there's been a couple of raises over the past 12 months since I've been there. I think we've basically raised in the order of about $65 million or thereabouts. But a large part of that has been geared towards institutional grade placements. So that we can, I guess, prepare the company for that longer term institutional support, and what may be a bigger lick of capital. Although now that we've broken the back of that, I'm not sure that we'll need that larger capital inflow. But with regards to the other instos, I won't disclose who they are because they haven't gone substantial. But we are starting to build up groups that, I guess, in particular, we're targeting groups that are there for the long term precious metal cycle, rather than your general sort of momentum traders.
Yeah, mate. Upside, I guess. Looking at like in the district, like at Apollo, which is 5 kilometres from Paris, like 8 metres at 1,200 grams per tonne. That's bloody Mexican grades. So you'd take them, and you got Perseus 2 kilometres from Paris. Like with, I guess, while these work streams are going on for the project, like how much are you putting any attention towards exploration, or it's probably not going to move the needle for where the company's at during the build phase, or not?
Oh yeah, no, there's about 3 exploration work streams that are on plan at the moment. So one is directly around the pit itself. So if you scroll back a couple of slides there, you'll see a bit of a red and blue looking shape. basically that one there, Matty, if you look at that, those areas that are highlighted in boxes, basically to the left, to the top of the screen and to the right-hand side there, that's where the optimization at $48 was wanting to push out into. So I wanted to take that material, but because it was inferred in nature, we deliberately excluded it because I didn't want a resource or a DFS coming out that had a high degree of inferred. So as it stands, we've got about 14% inferred material in the entire sort of life of mine process, but only about 1% of that during the repayment period. So yeah, it's relatively low risk from a lending point of view, but we've been actively drilling all of those areas now. With the view that, we upgrade that from inferred to a high degree of resource confidence, and then that becomes part of the broader mine plan. So that exploration is underway at the moment. We're also drilling in the middle of the pit there for data density, so that red area. Now, a lot of that's about increasing data density. At the moment, we've got about 25 metre centres, so the drill spacing is quite good, but I really want to take that down to 12.5 metres, so almost grade control level data density, because when we go through this, some of the experiences we took from Kanmantoo is the lenders are going to put a lot of scrutiny over that geological certainty, but in particular the grade continuity during the repayment period. Because when you have a process plant, for us, 1.5 million tonnes, the grade, once that 1.5 million tonnes is maxed out, that grade dictates how much revenue you're going to generate. So they want to see that during that repayment period, there's a high degree of certainty of grade. And I want to demonstrate that through some additional drilling. So all of that drilling is underway. And then going back to your other slide there, that showed sort of more that regional opportunity. So what we've got there is basically a 15-kilometre long corridor. You've got Paris sort of sitting there in the middle. As you said, Apollo to the north, 5 kilometres, 1,200 grams per tonne over an 8-metre section. It is Mexican grades, they're excellent, but we need to get in there and do some more work. There's been limited drilling outside of Paris. Most of the time, money, effort has really gone into getting the DFS to where it is now. Perseus, that you mentioned, that was actually drilled only for sterilisation drilling. So we didn't know it was there. That's where the magazine was meant to go for the explosives. So
there you go. Oh, that's good bang for buck.
There was 4 holes and, there was 4 holes and 4 hits. So we haven't gone back there and drilled it yet, but we need to. We've actually been drilling at Helen more recently and just waiting on some assay data there. Some of the other areas I'm quite excited about, though, Athena and Hestia, they're part of an earning we're doing with our neighbours and Alliance Resources. But something like Athena, for instance, that was actually drilled by a group called Traff Resources. That was later then taken over by Ironclad. And that was drilled for an iron ore. There's actually an exposed outcropping magnetite deposit sitting there, and they just walked up that, drilled some vertical holes down it, got through the magnetite body about 70 odd metres deep, drilled another 10 metres, said, right, that's the end of the body, and walked away. And it was only after Paris was discovered, someone went back and assayed it for silver. And it turns out that quite a few of these holes are passing through or terminating within silver. And you see some of the hits there, 20 metres, 160 grams a tonne, including 5 at almost 500 grams a tonne. And when we took it over, we did a bit of a data search, found another hole that wasn't reported, 7 metres, 111 grams a tonne. I want to get back out there and have a look at that one. But interestingly, they drilled the outcrop. Right next to that is actually another geophysical target identical from a mag signature point of view to that one that they drilled. I suspect it's going to be very similar, but there's never been a dedicated drilling program for silver, and that's what we'll be onto later on this year.
Yeah, very good. The share, while this is all going on, what's your view on share consolidation? You got 2.5 billion shares on issue, and nearly a bit below $500 million of in the money options. Do you think it does anything while you're going through this process, and if the silver price is sort of staying where it is, or not a big ticket item?
Look, I think the time to do something like a consolidation is when you've got a catalyst, and so I wouldn't do it as a standalone event. I don't think that adds, particularly any value. But look, there is quite a lot of interest in our stock from North American investors, and they are a bit more picky about how many shares you've got on issue. It is a discussion that we've had, and I think at some point when it makes sense to consolidate that share registry, would have some merit, but it's not something that I'd go and do as a standalone event. I'd rather focus on just basically de-risking the project and delivering value through that. But look, should there be sort of an event or a catalyst to do that, then look, it would make sense and be easier to manage. And particularly over in that North American environment, we see that they don't love companies that are holding in excess of 1 billion shares on issue. So
I guess the final question, mate, and as you said, you would have taken this 3 years ago, but let's assume silver stays at $60 an ounce US. Would you be happy with that?
Absolutely. I mean, the best thing for us would be that it picks a price and just trades sideways for 12 months to give people some certainty over what that new floor would be like. It looked like that had sort of landed at about $70 to $80. It just recently has come off a little bit, down to around $60. But we put our DFS out with two numbers. It was trading between about 70 and 90, quite volatile at the time we put the DFS out.
Yeah.
In February, so we put it out at $80 for one of just a better number. We also used basically the midpoint of consensus pricing from January, which is about 60 US. And as you say, you've got the two sets of numbers there. You can sort of see the difference. Yeah. I guess the key thing for us is, it was optimized at $48, so even a much lower price. And then, I'm pretty comfortable that meat seems like the key financial drivers under stress, like debt service cover ratio, reserve tail, even under those, sort of stress scenarios that the lenders are going to look at this through. So very comfortable that the project get financed, we get away, even under, much more adverse pricing than this. But you can sort of see the metrics. I think the key one here to point out is probably down the bottom there. You sort of see 42 and 27 as numbers. So basically what that's saying is this is our leverage to silver. Yeah. And being pure silver producer rather than most Australian companies that have promoted silver stories are really lead zinc projects with some silver credits or their polymetallic deposits where silver's an important contributor, but it's not the main or the primary value driver. We are different. It is silver doré. It's a pure silver product. So we move with the silver in a much more leveraged fashion, and you can see that there. For every $1 US, it adds Aussie about 42 mil to the free cash generation, and 27 mil to the NPV. So we're really leveraged with silver. That works in both ways. But for those people who are looking for pure silver exposure in a tier 1 jurisdiction, look, we have no peers. I mean, that's just the reality of it. There are no peers in Australia. Everybody of scale that's promoting a project or developing a project or maybe even operating, it's polymetallic. It is lead or zinc.
Concentrate.
And look, nothing wrong with that, but I mean, the reality is that lead and zinc prices have been flat. It's silver that's been on a tear. So rightly so, people are calling themselves silver mines, but in fact they're not. I mean, the reality is there is only one silver opportunity in Australia, and that is the Paris Silver Project.
Even Cannington was all going into concentrate back in the day. Did they produce silver bars, even though it was ridiculous grade?
I think it's all con.
Yeah, it was all con. Yeah.
So then, then you look at pure silver, and there's some cracking mines over in Mexico, and there's nothing wrong with that, but it's fundamentally a different project. I mean, our ore body's flat, tabular, as I said, 10 metres below surface, 400 metres wide, a couple of Ks long. So 175 metres deep, mate. It's like a quarry, mate. It's really basic.
It's that. Is it free dig? A lot of free dig?
Yeah, look, I don't love free dig as a concept. It probably will be. It's soft enough. I would much prefer just to fluff the ground up a little bit and dig straight through it. I think you get better efficiency out of the machines. Yeah. And a lot more certainty over schedule. I mean, one of the things that does stuff a schedule up is when you have short-term variations, particularly with free dig, you go hit a hard zone, you can't dig through it. You can stuff your short-term mine plan up pretty quickly. So I would rather just have a drill rig on site, do a nice wide-space platen, fluff it up a little bit and smash through it. It is soft material, so that the wear on things like GET is going to be pretty low. And we if we spend that little bit of money on explosives, I think we rip through this ground really quickly from a productivity point of view, and we provide a lot of schedule certainty. But I mean, it is interesting. This is one of the projects that can actually survive a little bit of schedule uncertainty because we build so much stockpiles. I mean, basically, within 3 months of starting this operation, we have more than 3 months of ROM supply. Within a year, we've got about 1.3 million ounces of payable, recoverable silver. This is like over 110 million bucks at today's price, sitting on the deck. And it just means that, not if, but when we have schedule variations, because they will occur, they occur at every mine site around the country, rather than doing things that can destroy value, like dropping into benches just to fill a mill, we're relying on things like our stockpile to be able to draw that down while the operators and the guys in the mine just focus on getting back on track as efficiently as you can. Because the one thing you can't prevent is those sort of short-term unplanned schedule variations, but you can have resilience through things like stockpiles.
Yep. Okay. Last question, mate. You said, and it's quite clear that how leveraged you are to the silver price, as most miners are. But this is, very evident, and we've seen the silver price could halve or double, and we've seen it happen very quickly. What is your pitch to silver compared to gold?
Well, I think the fundamental difference is that it's got dual utility. I mean, gold is a store of wealth. It's been a fantastic store of wealth, and it's a go-to metal when the world gets uncertain. But other than that, it's got bugger all use. Silver is different. It's not only a store of wealth, but it's also got an underlying industrial demand, and that industrial demand is growing. We've got demand growing through the whole green energy technology sort of boom that's going on as people start to decarbonise through electrification. What we're seeing here is silver pouring into not only solar panels but EVs, semiconductors, all the data centers that are supporting all AI. They are all being driven through silver. So that electrification thematic is really driving demand. We've had 5 years and growing of structural deficits, so not enough supply to hit demand. And there's only so many years you can keep tapping into the reserves to keep funding that demand deficit. So at some point it breaks, right, and the price goes north. But I guess the interesting point with all of that is it's on the supply side. So about 75% is as a byproduct, as we've been talking about. It's coming from gold, copper, lead, zinc miners, and mate, these gold and copper miners, they're not changing their production profile to go and get a little bit more silver just because the silver price has gone up. I mean, they're chasing their primary commodity, gold or copper, and then of the supply that is coming, there's over 70% of it's coming from Latin America, China and Russia. I mean, these are places that are hardly known for their geopolitical stability and operational sort of efficiency. So if you want true tier one, pure silver leverage, there's not many places you can go to get it. I mean, we are almost it globally.
Yeah, and the big chunk of it comes from all the South American copper mines. a lot comes from Mexico, but like the amount that comes out of Escondida and that at low grade, but there's so much of it. Yeah, interesting, mate. That has been a great overview. Tell bloody Joe congrats on his new job for me, and mate, hope it all goes well. And you did a great job getting Kanmantoo up and going, and. Mate, sure it'll be easier this round, hey? Let's just run with that.
Much easier this time. Much easier this time. I'll let Joe know. He's chomping at the bit to join on, and it's been a long time coming, but we've got him on board now. Looking forward to building another operation with him.
Good on you, mate. Hope all goes well in South Australia with the government and everything, and we're all rooting for you. Well done.
Thanks, Paddy.